When looking up the cost of buying a home, we have gone through some phenomenal changes this past 5 years. We went from, hey, you don't even need your closing costs, the seller can pay for them, or you don't even need your down payment, the down payment assistance programs got you, to a few years ago, we're like, yeah, not only do you need your down payment and closing costs, you need like an extra 5 or 10K just to bribe the seller to accept your offer. Well, ladies and gentlemen, we are now in the market shift, and I'm happy to say the days of needing an extra 5 or 10K to bribe the seller are gone. However, I implore you, friends, family members, homegirl homies, Chads, Edgars, wherever you know me from, it is important that you save an extra $5,000 to $10,000 for your next home purchase, because it will save you tens, 20s, dare I say, hundreds of thousands of dollars over 30 years. Interest rates are ugly and disgusting. Just like me after an all-night taco binge, you definitely do not want to see those rates on your mortgage payment for the next 10, 20 years. So what can you do to battle them? Well, there is something called an interest rate buy down, and a lot of people kind of know or don't know about it. I recently mentioned it in a video, and a lot of people were just like, hey dude, what is it? How does it work? What's going on? Well, I'll be honest with y'all, I'm not a lender. However, I'm very good at explaining complicated things, so I'll help you guys understand it, and I'll use a real life example that a client of mine just recently, like literally close today, used to help you guys understand it a little better. So without further ado, let's get the ball rolling. You guys like my art? Pretty awesome art, right? What is an interest rate buy down? Well, it's like a PowerPoint presentation. Hello, everyone. Every day, lenders receive a sheet of interest rates, and essentially there's the ones that are free, which is probably the one that you're being quoted. And then at discount points, there's other rates that can be accessed. Usually there's a rate, and then right next to it, there's a discount point that's right next to it. Essentially, the cost that needs to be paid to reach that rate. And yet this is a buyer beware for everybody looking at lending online. A lot of these online lenders, if you look at their websites, it'll say discount point there. So it'll give you like advertise a nice cheap little rate, but right next to it, it'll say discount points 1 or 0.57 or something. Well, yeah, they're not advertising the best rate. They're advertising you, hey, we'll get you this rate if you give us a little more money. So just a heads up. Anytime you're shopping around rates, ask, is this a true rate or is this with a discount point? To access these lower rates, you need to pay essentially the cost to achieve that. And a lot of times that cost is achieved by a discount point. What is a discount point? A discount point is essentially 1% of the loan. So for example, if you have a $300,000 loan, a discount point would equal $3,000. Therefore, you can do the math. If it's a half a discount point, it would be $1,500. If it was 2 discount points, it would be $6,000, etc., etc. So a lot of times the rate breakdowns work like this. You might be being quoted like a 7% interest rate at no extra cost. And then to get like 6.75, that might be 1 point, right? So you would think it works mathematically. We're like, hey, if 1 discount point gets me 0.25 off, then 2 points will get me 50% off, right? Not the case. Every day these rates are different and they fluctuate. However, let me share with you a real world example of how it worked and how it saves money, right? So I currently have a sheet on my website called a estimated cash to close calculator. So it's right here. So what I did to it is over the last day, I spent I added a different page to it called the interest rate buy down calculator. So I'm going to be using this. And if you're interested in this product, you don't have to get this. You can make this on your own. But if you're interested, just go to javiervidana.com/resources. Now, anyways, we are looking at a $500,000 loan. Oh, look at Missing Melon is playing Terraria. Good luck playing Terraria, Missing Melon. $500,000 loan, and all this information of the down payment, the estimated closing costs, home inspection, all that's being inserted because it got filled out here, okay? So just to let you guys know, that's all, relevant right there. So in the situation with my client, so it does the math for you here. $500,000 of purchase price, $5,000 will be this essentially a discount point. Now, right now with the cash to close, with the closing costs, down payment, home inspections, and everything, your average cash to close is $33,200. So that's how much you would need to buy the house. Now, my client was quoted a 6% interest rate for free, so no discount points, essentially no cost. And the payment, well, we're not going to use my client's actual numbers. What I'm going to do is I'm going to go to bankrate.com and I'm going to do a quick monthly payment calculator. So using mortgage calculator, $500,000, 5%, I did $100 of PMI, and I did about a property tax of $200 a month. The monthly payment breaks down to $3,200. $3,213, I'll type it right here. And then what I'm going to also do is I'm going to look at the interest rate, because when you're looking at your rates, guys, you're not just looking at the monthly payment. It's important, but that's not the only thing you should focus on. You should really consider pulling up an amortization calculator to make sure to really see the true cost of the loan. Because as we can see here, after 30 years with this loan, you're going to be paying $550,789. That is a lot of money. That's actually more money than the actual cost of the loan. This is what the situation was with my client. They were quoted 5.75. So to get a rate of 5.75, they needed to pay 1 discount point. So let's actually plug that in now, and I'll do all these numbers really quick for you to update it. All right, so basically after putting all the numbers in, if you guys might have noticed these numbers were wrong, I just fixed them right now. Pretty substantial difference of interest rate, actually about a little more than $25,000 of a difference over 30 years. So basically a $5,000 investment would save them a little more than $25,000 after 30 years, about $22,000 after 20 years, and approximately about $13,000 to $14,000 after 10 years. However, right here, if you see the calculator, we have to calculate what's our break even. So at what point, you know, because there is a difference of monthly payment you're going to pay, approximately in this case, it would be $76 of a difference. So eventually, how many months would it take for us to catch up to that additional $5,000 deposit? Well, here I have it where you can find that out. About 65 months after, or 5.4825 years. Let me change that so it's not so specific. After 5.5 years, you will get your initial investment back. So it makes sense for them to go forward with this if they're staying in their property for more than 5 years. But here's the crazy part about this. The lender said, hey, if you give us 2 points of a discount, right, so $10,000, we'll give you a interest rate of 5.35, 5.35, not 535, 5.35. That is not 0.25 of a difference. And that makes all the difference in the world now. So now if we're going over here and we're changing that to 5.35, our monthly payment drops down to $3,018. And amortization wise, we're paying significantly less. Here, I just added this different column to really show you the difference. After 30 years, you're gonna pay $70,000 less of interest for an extra $10,000. Now, on top of that, if we look at our break-evens, our break-evens actually become less. Even though your initial deposit was a lot more, it will take approximately 51 months to get those $10,000 back, or approximately 4.27. So once again, if you put more money to buy down that rate, you will collect that money back faster. You'll be paying doubled $70,000 less of interest over 30 years. And if that's, I mean, you're gonna be like, Javier, well, I'm leaving after 10 years. Well, after 10 years, you can see the difference here, 244 to 276. That would be, what is that, $31,000? Okay, so you still pay $30,000 less of interest after 10 years. It just becomes a no-brainer. Now, once again, it is super privileged of me to say, guys, just save more money. Just save more money. That's the solution to all of our problems. I know, I get it. It's hard. But now more than ever, you really need to make sure to do your part to try to save as much money on that interest. Because the last people we want making more money is the banks. We don't want to pay them more interest, especially $70,000 more of a investment. So, okay, and this is why you probably want to run the numbers, because I just ran the numbers to say, hey, what if they offered you for 3 discount points, 5% interest rate? Well, yes, you would be paying significantly less interest. However, it'll still take you about 50 months or 4.2 years to get that money back. So to me, it makes more sense. I'd rather keep those $5,000 in my pocket for emergencies and families and whatnot, and at least do 2 points so I can get to that point where I'm saving significantly more in interest. And I will eventually get my money back after 4.2 years, and anything after that, I'm basically saving, right? So whatever option you want to go with, you simply have to click it and it'll add it to your total cost. So for this example, an extra $10,000 would get their cash to close up to $43,000. However, over 30 years, save them $70,000, and that is initially money they're going to get back after 51 months or 4.27 months. So guys, now more than ever, it's really, really important that you save as much as you can to buy that rate down, because that rate is going to hurt. I'll tell you what, those people, if you're watching this and you bought with a 2 or 3% interest rate, congratulations, good for you. Why are you still watching? Go watch some freaking, I don't know, Dude Perfect or something. I don't know, whatever. What are the kids watching nowadays? But that's all the time we have for today, ladies and gentlemen. What do you guys think? Am I full of caca, or is this legit? Doesn't mean that's like my official slogan now. If you're looking for an agent referral, you guys need to know where to go. homemoney.com/Javier. You guys know what it is. And of course, all resources that can be found on javiervidana.com, especially the one that we showed in today's video. I appreciate everybody's time. Looking forward to see you in the next video.